Something that comes up often when I am talking to friends and acquaintances about selling their homes, especially if they've lived in that house for a really long time, is how much they might have to pay in capital gains when they sell. Now, if you are curious about how much Uncle Sam might take from the sale of your home, stick around while I demystify capital gains on real estate. Hey y'all, it's Christi on the Crystal Coast, and welcome to my channel. In this video, I am going to give you the big picture on how capital gains might affect the sale of your home. Now, if this is your first time to my channel, I share information about real estate in Eastern North Carolina, homeowner tips, and just general life at the beach. If this is something that interests you, please take a second to subscribe. And if you know someone else who would enjoy this information, please share. Now, I want to start off by stressing, I am not an accountant and I am not an attorney. And I do think it is very important for you to reach out to those professions to get the down low on your specific situation. The information I'm going to share in this video, I've gathered from research I've done over the years and from my experience with 18 years in real estate. Now, let's start with the definition of a capital gain. A capital gain is any money that you make from the sale of a personal asset. That could be stocks, it could be jewelry, it could be paintings. Anything that you own personally and is not used for a business is considered a personal asset. But in today's video, we are going to be focusing on capital gains as it pertains to real estate, in particular, your primary residence. Many people still assume that they've got to take the money that they make off of the sale of their house and roll it into purchasing another house within 2 years. No. That has not been the case since 1997. 24 years, it has not been true. In 1997, Congress passed the Taxpayer Relief Act, which changed all of the rules pertaining to capital gains on primary residences. 24 years, you guys. So you want to know what the rules are now and have been for 24 years? I want to stress again, we are talking about your primary residence. And the IRS actually calls it your main home. And they have a couple of different boxes that they want to check to confirm that it is your main home. They are looking to see if your license has that address on it, if you are having your taxes filed with that address, if you get most of your mail there, is it close to where you work, is it close to where you bank, and a few other things that they check because, you know, they want to make sure that it really is your main home. To put it simply, the 1997 Taxpayer Relief Act eliminated having to pay capital gains on the sale of your house up to certain limits, which we will go over in just a minute. But basically, you can sell your house and take that money and do whatever you want with it. I mean, I'd probably go sell around the world. What would you do with it? Let me know in the comments below. I'd love to hear. So let's talk about limits. The first limit is how many years you have to live in the property to be able to qualify for the exclusion to the capital gains. So you have to live in the property at least 2 out of 5 years. Now, the interesting thing is it doesn't have to be consecutive years. So let's give an example. Say you bought a condo and you lived in the condo for year 1. The first year that you bought it, you moved in, you loved it, and then you started dating somebody and you decided you wanted to move in with your significant other. And you move in with your significant other and you just rent out the condo for 3 years. Well, at the end of 3 years, the tenants that you've had that were fantastic tenants decide that they're ready to move on and move somewhere else. So you decide to move back in for a year and then sell the condo so you don't have to pay capital gains, which is great. So you've lived in it the first year and you lived in it the 5th year, and now you can sell it and not have to pay the capital gains that you make on that condo. So that is one example. The second limitation is that you can only take this exemption every 2 years. So let's take that example of living in the condo, moving out, moving back in, and selling it. Let's say that when you moved out, you bought another house and you lived in that house for those 3 years, and then you sold it at the end of those 3 years. then you moved back into the condo for that 5th year and wanted to sell it at the end of that 5th year, you would not be able to do that. You would have to wait a whole another year so that you would have your 24 months pass before you sold the second property. Basically, you just can't sell more than one property within a 24-month period and not have to pay capital gains on one or both of the properties. That may sound a little confusing, but the main takeaways are that you need to live in the property for at least 2 out of 5 years, and you can only take the exemption every 2 years. So you have to have 24 months between selling a property and not having to pay capital gains on it. There is a limit to the amount of money that you can be exempted from having to pay capital gains on. So if you are a single person, you can sell a property and you can make up to $250,000 more than what the cost of the house was and not have to pay any tax on that $250,000. If you are a married couple, that amount goes up to $500,000. You are still allowed to deduct the expenses for selling your house or any capital improvements that you make to the house, like if you've had it remodeled or painted, a new roof, all of those things. You can still write those off so that you can reduce the amount of income that you make off of the sale of the house. To give you a simple example, suppose you were a married couple who purchased a property in 2010 for like $300,000. And you lived in it for several years, and then in 2018 you decided to do a big remodel, and you remodeled the whole thing for about $100,000, and then you put it on the market last year in the crazy market that we're in, and you sold it for $900,000. Well, even though there is a $600,000 difference between the original amount that you purchased the house for at between $300,000 and $900,000, because you put that additional $100,000 into the house as a capital improvement money, then you get to deduct that from the amount that you made as well. And that brings you down to the $500,000 that you are allowed to not have to pay capital gains on. So you end up making that $500,000 basically tax-free, assuming, of course, this is your primary residence. Again, I am not a professional tax advisor, an accountant, or an attorney, and I highly suggest that you reach out to those professions to get specific information about your circumstances. However, if you are looking for a real estate professional in Eastern North Carolina to help you with the sale of your home, please shoot me a message. I'd love to chat and see how I might be able to help you out. I know I've hit you over the head several times that this video is only about the sale of your primary residence or main home and not about investment property or second homes. And there are some tax-friendly options for second homes and investment properties like 1031 exchanges, but that's a video for another day. Did you learn something new today? If you did, I'd love to hear in the comments below. Thanks for viewing, and I look forward to seeing you in the next video.